So thank you for joining us for today's CEMC webinar. At the CEMC, we continually stay in front of what types of challenges and innovation changes are presenting both challenges and opportunities in the asset finance space. And so this year we are looking very hard at things like artificial intelligence and smart contracts and blockchain and then certainly big data. And I think today's webinar is a special treat because we're going to be able to have a couple of experts from Sandhills talk to us about big data, and in particular with a use case that is so relevant in the asset finance space, and that is about asset valuation. And it's such a high impact from both a pricing and a risk management standpoint that it really is a critical skill. And I think that Sandhills has a good story to tell in terms of a use case and how to really optimize asset valuation using data science.
Thank you, Patricia. So just to give you a little background on myself, my name is Lubischer. I'm the corporate sales executive at Sandhills Publishing. I've been with Sandhills for about 18 years, and in that time I've wore many hats within Sandhills. So to start off, I guess, early in my career, I was climbing around machines at auctions and such, checking serial numbers, identifying how a machine is equipped, and then calling back that information into our trade sites out there of Machinery Trader, Truck Paper, and Tractor House with auction results. So I have firsthand experience on equipment. Not only that, I'm a farm kid from Nebraska, so I grew up in a small town in Nebraska where most of my relatives were farming in the construction business, and in fact, I ran a lot of that equipment in my years out there. So moving forward to today, as a corporate sales executive, I work with a lot of finance companies, manufacturers, and working some deals from the corporate side. And most recently, the past several years, I've been working on a fleet evaluator tool. Fleet evaluator is a tool for us that gives instant valuations to a lot of dealers out there. And most recently, we're starting to pass these values to banks and finance companies, insurance companies, appraisers, but different people in the market that could use valuation software. Alan, if you'd like to give a detail of yourself as well.
Sure. My name is Alan Hartung. I've been here with Sandhills for a while, and also I've been a data scientist for about 10+ years now. A lot of my specialty is in predictive models, understanding data relationships, and data visualization. I'm also, like Scott, I grew up in Wisconsin on a dairy farm, so I've been around ag equipment most of my life. Know the ins and outs of the industry and the use cases, and know how to kind of get down and actually fix some of those as well. So
okay. So just to give you a brief background on Sandhills Publishing and who we are as it competes to this model today. We've been around for quite a while. We're a privately held company, been around since 1978. In fact, Sandhills Publishing owns several trade publications out there, which I would call top of the heap trade publications, such as Machinery Trader, which is a leading website and publication in the construction industry. Truck Paper is the lead in the trucking and trailer industry. Tractor House would be the lead in the ag. Most recently, we've got a little more granular in terms of some of our developments, and we have items up like Crane Trader, soon to be a publication and such called Forestry Trader as well. Controller would be part of our aircrafts. Market Book would team multiple products like Machinery Trader, Truck Paper, and Tractor House together for industries outside of the U.S. Auction Time is a leading platform for auctions in the ag industry, and very close to the top when it comes to construction and truck. Rental Yard would encompass many of these items out here with how we push rentals to the industry out here in that space as well. But Sandhills is a large company. We've got well over 1,000 employees, in fact, close to 1,200 employees. We've got locations across the U.S., several outside, major footprints, outside of the U.S. in Europe and Australia, New Zealand, South Africa, Latin America, but a lot of exposure out there. We've been in a large growth mode lately. However, the biggest thing we want to talk about today is the big data and how that applies. And our experience when it comes to a product out there with Fleet Evaluator, we'll jump into in a minute, but I think the first thing to talk about is some of the challenges that I've seen working with banks out there and how they do valuations. There are some missteps, I believe, in this industry out here. There are some shortcuts, and there's some issues when it comes to getting a true value on something, which we don't find out until it comes to a default or the end of a life of a loan, to where we identify that, you know, it wasn't the best deal to finance at, or it wasn't set with the correct value in mind from day one. So some of the implications of this, of having a lack of data out there, just to start off some challenges, I suppose, would be limited data or using internal data. I'll give you an example of internal data. Several banks will say, well, I will write loans, and then I'll refer back to those loans I had written to identify as a test mode of what I should lend for in future opportunities. Well, if you make a bad deal on the first step, you know, you looked at the information wrong or whatever, that's going to continue to result in more bad deals out there. Not necessarily in terms of a loan, but in terms of being upside down in terms of a default. Now, with that said, internal data, you know, will continue to replicate itself in bad deals if there's a bad deal in place. In some cases, you have good data that you happen to hit on, but we certainly need external data for that. So a lot of that data is also non-descriptive. So most banks out there are looking at a very limited data set. They're looking at a year, make, model of how that unit is equipped, and it really doesn't give you a whole lot of information on what that is, especially at the point of an origination. And that can be dangerous with some of the components and such. If you're purchasing data out there, data can be very expensive, and the resources that you get data from can vary. As far as I know, the data is not regulated as well, so you got to be careful that you're getting good, clean data from a reliable source out there. A couple other factors that we'll touch on further in this presentation. Location is a big factor. Where a unit is located, we'll show you some examples coming up. Where a unit is located is very considerate to the price out there. So taking that into consideration, not just raw data across the U.S., but where it's located is a big factor. Again, market and sale data not factored in is a component, because, you know, when it comes into what the market is today and how old that unit is and different factors is not always considered out there, and is a danger zone for getting bad data or bad valuations. And simply the last one that I've learned over the years is in some cases people just don't know what they don't know. And honestly, what that comes down to is just having experience in the industry. You want to deploy the experts that have experience in these. Myself and Alan, having ag backgrounds and construction backgrounds, have definitely helped us understand what this industry is doing. We don't have to research products. We know what these products are. So a couple of things I've seen with banks. Sorry, go ahead, Patricia.
No, I was just going to say there's a lot to consider. Yeah, I was going to say that let's jump into some examples. You were just talking about a couple of things you've seen with banks.
Absolutely. So when it comes to banks, I've seen you know, some standard depreciation schedules. A lot of banks will utilize those, or even OEMs will promote a standard depreciation out there. When standard depreciations really don't work today, they don't consider market, they don't consider location. The old days of saying something is going to depreciate 10 or 12% in the first year and 8% in the second just doesn't apply to this today. Now, those can get you somewhat close, but big data is really the answer that brings it all in to show you what the market is actually doing today, not what it should be doing today. So another side out there are desktop appraisals. I see a lot of these where they try to find a comp or two. A comp or two can be valuable to say, I found a recent unit that sold in this area, but who knows what that sale was like that day if it's an auction result. Could there have been weather issues? You know, could there have been something going on in the market that had people kind of sitting on their hands that day, or could somebody have just paid through the nose for an item that shouldn't have went for that high of money out there? I've also heard even from some dealers out there that they will try to work up a depreciation schedule on a per hour basis. Again, that may work at a certain point in a depreciation schedule, but not at every point. Items depreciate you know, much more at the start of an asset as opposed to at the end of life of an asset out there. Also looking at standard websites, even like our own Machinery Trader, Truck Paper, Tractor House, even auction sites out there, Ritchie Brothers type or something. That data is available, but it's concerning when you don't consider all the factors that you could use. So what are some of the factors we can use out there? Some of the solutions I've identified, and myself and Alan together, along with our data science team here at Sandhills, you know, we've looked at a lot of different things, and realistically speaking, from the top down, bigger data is better, right? It seems simple, but it's the more data you have out there, the more you can kick out what we would call outliers, a unit that had sold high or sold low, and that really normalizes the data. And that's what you're looking for, is the most data you can get to. So you hear big data all over the place these days. Big data isn't just a hot button out there. It's a way of life when it comes to valuations. Now, when you have big data, there's a lot of different factors you have to do to it. You have to cleanse the data we found. You know, you can't just look at year, make, model of a unit. You know, how is that unit equipped? Where was it located? Location can be a big factor with some of that. But here at Sandhills, what we do with our product, I like to call it deploying the Army. And we'll have over 160 data cleaners that, believe it or not, will just look at assets out there and determine how they're equipped. So when something comes from an auction and it's not completely filled out of how that machine is equipped, we'll actually look at the photos, read through descriptions. If an hour meter and hours are not shown in there, we see a picture of an hour meter, we translate that. So what we do is a large investment in just simply cleaning data within our sources out here. Now, relating those components to cost, too, a lot of factors you can do is you can see a unit that's equipped, let's say, with a thumb. How much value does that add in the actual market? Or a dozer, a D10 dozer, let's say, Caterpillar, that has a ripper on it. That could be a $50,000 addition. If that's not considered, you know, that can be a big misstep. So relating components to cost as it's shown in the data. Again, location accounted on every asset. It's a must-have out there. There's so much volatility from market to market, so we've identified regions within our product to identify like markets and how they do business. The health of the market is not often considered, so what the market is today is a big factor. And I'll be honest with you, today there's a lot of noise in the market. Certain things like steel tariffs that are in place, commodity prices, different things out here that would determine the health of the market. So with new equipment today, they are considering things like a steel tariff out there that will add substantial cost with the cost of steel to an asset. And that has an effect on used equipment, on new equipment, on the entire market out there, even job starts on the construction industry.
Well, let's go ahead and jump in. You've talked a lot about the the fleet evaluation. Let's take a look and see how that handles it, and then maybe talk about some specific equipment type examples. That always makes it come to life a little bit more.
Absolutely. So let's talk about the Fleet Evaluator tool just a bit on what we have here. Just to give you an idea, this is a web-based system here, and we'll flow through this fairly quickly. What we do in Fleet Evaluator is we'll look at year, make, model, and how a unit is equipped out there. And we've got a number of details that we'll look at, what we would call needle movers in terms of value. So we don't look at every aspect of how it's equipped because you'll size your data down too much. But on certain things, as we had kind of mentioned on the drive and such, as we'll get into in the next slide, but there's some factors there that definitely move the value. The second thing that we'll project out there is essentially an auction value and a retail value. This is all based off of data science, big data, location, health of the market. All of these are applied through our data science technology. Along with that, you can choose to run single valuations within our system. You can buy valuations or just store them in our system. And there's a tiered structure, which after this presentation, if you'd like to hear more, you'd be able to email the CEMC and we can get together on what some of this costs and how this runs. But certainly where we're at in the market, we're very happy with where we're at and comfortable with our products out there, and the values we're putting out are very, very true to what the market is today. So let's just get into the implications of big data here and how this actually works, what is going on in these. So there's essentially three things that we would look at out there: the big data that's cleansed, obviously the location, and then considering the health of the market. All those things are very large items, and we could have a completely separate webinar on each of those in terms of how things are described and how detailed you get. But those are the three considerations that we feel are major factors in valuations. So to look at one, let's just look at big data and cleansed data, as we see on the right with a 2012 Caterpillar 420E with around 3,000 hours. If you look at all of the numbers on this, these are just a handful of things that I would call needle movers, again, things that would change the value on an asset out there. Some very top-level ones would be whether this is an OROPS or an EROPS, which would mean if it has a closed cab or an open cab. Definitely contingent on the price if it's an open cab to closed cab out there. Certain things like auxiliary hydraulics, whether it's got a thumb on the unit, if it's two-wheel drive or four-wheel drive, if it's got an extend-a-hoe, or if it's just a standard stick. All of these are major value markers, not only in the new invoice, but they carry along to a certain percentage in the used market. And if they're equipped that way, they're two different data points. So the challenge with using some comparables out there and like desktop appraisals, as I had mentioned earlier, we can see some live examples here. When it comes to just two assets that I've randomly pulled in our system out here, looking at again, the same 2012 Caterpillar 420E backhoes. Now these particular backhoes, one has about 3,100 hours, the top one, and the bottom one has about 3,900. So they're fairly close in hours. They're both equipped with four-wheel drive. They both have open operator stations, and they're fairly similar. They both sold in Florida. Now, the bottom unit had sold in February of 18 at the Florida auctions down in Orlando. The top unit had sold in essentially 2 years previous to that. Now, the values there at $16,500 and $37,500 are an extreme distance apart. So when we're using desktop appraisals, if you used either one of these results, it could be presenting bad data to you. So what you want to have is a large conglomeration of data that would kind of normalize what's happening in this particular market out here. With these two units here, these two units are one of thousands of units that we would consider out there, which would normalize these. If that 16.5 happens to be an outlier out there, that would be kicked out of our data set just because of the amount of normalized data that's encompassed in there. So the difference in data out here, let's talk about, the access to big data. When you actually have big data, how do you read it? What does it look like? How does that work? Now, a question that I would ask out there is when you're thinking of an Excel file with a lot of trucks and data lined out, it's very difficult to tell what that truck actually is, what it looks like. How is that data organized to you? So the first thing, how to read big data. These trucks that I have listed on this page here, these 4 examples, the one commonality they have out there is they are all Kenworth T800 trucks. So with that said, you can really get a lot of differences in Kenworth T800 trucks. The first one being a sleeper, the day, the dry, and the dump truck out here. Those are all different used trucks, different values, et cetera. If it comes in an Excel spreadsheet, though, it's going to be difficult to pick out what type of truck that is. Using the third example of the dry van, depending on what category big data would come in out there, you have to clean that data and organize that. So these trucks could be called a number of different things. I've heard of these dry van trucks called cube trucks or box trucks, van trucks, a number of different things. Now, if you're getting data from multiple sources out there, you have to normalize that data to say a cube truck, a box truck, a van truck, and a dry van are all the same category. And that should be all part of the same data set. Otherwise, you're going to limit your data set. So it takes experts in that industry to actually identify those trucks. But once you get the data all cleaned up and you get that into a workable mode, that is the first step. And that's a big step. That's not something even a lot of banks or dealers can even do. It's very difficult to organize and create that data without a lot of manpower built into it. And once you have that created, then you have consistency in data sources. So with us, you've convinced me, Scott. You've absolutely convinced me that there's so many different things to consider, from the features of the equipment to how it's being used to where it's located and the market conditions. So with so much complexity and so many things to consider and so much data out there, I'm going to ask Alan to bring us behind the curtain and help us understand from a big data standpoint, how do you address it? How do you organize this and make some sense so that you can make good decisions using this big data on asset valuations?
Sure. Scott hit a lot of it already. I mean, he talked about the data sources that we have and collecting that. And we get listings, we have auction data points, retail data points, we scrape data, we get, you know, market indicators, price indexes, all that comes in structured or unstructured. And we take that and we put eyes on it, whether it be through multiple people or, you know, we apply some code to extract information from that. But it's a very important process in the part of getting your data in-house cleaned, organized, so that you can create those relationships, you know, put in the location on it, labeling it correctly. That's a key point. So some other things that, you know, that we do is, you know, we do have people look at pictures, as Scott indicated. We collect VINs, and sometimes we look at, you know, does the VIN match up to what the description says? Sometimes a make model, a year make model might be different than the VIN. It's a way for us to validate and employ certain standards across all of our data so that we know that we're working with the best set of data available to us. So when we get it in that state, another process comes to light. So essentially you have all that data, what do you do with it? And that's kind of where our data science team comes in as well. First we apply our knowledge, we understand the data, we look for needle movers, such as, you know, are there certain volumes in certain regions moving a different way? We look at how do certain manufacturers stack up to against one another? How do certain make models stack up to one another? We take that, we try to understand it, and then we take a step back and say, does the data sync up with industry knowledge? And that's a key aspect as well, because the data could tell us something else versus what the industry or the field is telling us, making sure that syncs up. From that point, after we're done understanding.
So help me understand on that one, Alan, and how many data points you're dealing with as you're looking at that analysis and saying how does it stack up with industry knowledge?
Yeah, you can kind of move to the next slide there.
Yeah.
This is one category, conventional trucks, day and sleeper cabs, and this is a pared down set of our data, and we have auction data points and we have retail data points. So that's after the dealer had sold it to the individual.
Let me just pipe in there for 1 second. So the two data points that we're talking about here, not only the auction data, which is most accessible out there in the public market, but being unique like we are with Machinery Trader, Tractor House, and Truck Paper, working with large dealer groups, we actually have access to a lot of retail sold points as well. So what we're looking at there as well, the orange boxes in those conventional trucks would actually be sold points. Another data point that's very, very difficult to get your hands on unless you're in a position like we are with Sandhills. The auction data points are public auction and very, I shouldn't say very, more easily collected.
Yeah, and that's just a subset. You know, we do have other information available to us, such as listings, for sale information, and, you know, for this category alone, there's, you know, roughly 720,000 data points. If you throw in listings and other type of information, we might have upwards of 2.5 million data points on this one category alone. And how that information comes into play is that if you have this type of volume, you can start weeding out those outliers, as Scott was referring to, you know, those types of sale points that were too low or too high based on some weird thing that was going on that day, you know, the weather or, you know, whatever the situation may have been. But we can use the law of averages and we can kind of get at what is this piece actually worth with the amount of data. And it's just not the amount of data, it's the amount of clean data. You can just have a bunch of data available to you, but, you know, putting eyes on that, cleaning it, and making sure it's accurate is just as important. Okay, so to kind of get at a point, we're gonna look at this John Deere combine here, and some FIs use a straight line depreciation. And what we're looking at here is just an average price of these combines over their age and usage, the amount of hours they've been used. And the bluer group is low hours, and the orange group is higher hours. So a higher hour unit doesn't cost as much. So we kind of see this straight line depreciation trend where a higher hour unit is going to cost less than a lower hour unit. But even if we use that straight line depreciation method, there's still great price variation within this make model itself. And having clean data and clean specs on that data is also important. Some specs might be, does this combine have duals? Does it have a yield monitor? Does it have auger extensions? Or what are the separator hours? Or it could be that sometimes at auctions these combines sell with a header on it. Did the combine sell with a header attachment? And those header attachments can cost upwards of $5 to $60 grand depending on the type of header you're looking at. So the more amounts of clean data and the more attributes lead to more accurate valuations.
Well, that's interesting, Alan, because you've talked about, usage and features, but then you also talked about other things too, like, and I think, Scott, you mentioned this too about location. So if you were looking at this page, that would give you a view, right, but then what about these other factors, like market conditions in certain locations? How do you include those? Yeah,
it's part of our data cleaning process as well. When we see a machine, we put a latitude and longitude on that piece, so we know where that piece of equipment is at. Each equipment category may have different use cases in each region, in each one of these regions. Like looking up here at this one side, this is an ag-related unit, so it's probably going to be worth more in the Midwest. And Scott, you kind of had a...
Yeah, to give a little real-time example into this, I used to have a territory when I was a sales rep, and looking in windows of different dealerships up there to kind of see how they ran their businesses. And in some cases in the Northwest, when a dealer up there would sell, let's say a combine, as an example here would show, to the Midwest, I would get a phone call after they would run through our product auction time. And what they would do is ask me, well, where is Hutchinson, Kansas, or where is Des Moines, Iowa, or things like this? And I would oftentimes wonder, why were they asking me where these locations were at, until I started to realize that that's where these units were selling to. So the price of a unit, let's say in the Northwest, could be, let's say it sells for $150,000 on an auction up there, which is the price it should sell for in that region. But somebody in the Midwest buys that asset for $190,000 or a $40,000 discount. It's worth $190,000 in the Midwest. They have a $40,000 discount on that unit. So as they put some freight under it and get that to the Midwest, a $150,000 unit would now, that they have 158, is worth $180,000, $190,000. So the location out there is very key, and one of the big tripwires that oftentimes people run into is they think data is data, whether it's located east, west, north, or south, that it all reacts the same. When it comes to location, there's different wear parts. When you get into construction, assets will work in rock more, they'll wear quicker. If they're coastal, they could be involved in salt. They could be involved in a lot of salt if they're in the Midwest. If it's an asset like a wheel loader that is set for moving snow and is moving a lot of salt this way, and it can deteriorate the machine. But certainly location has big factors. A couple of years ago, the oil sands in North Dakota were a big indicator up there in what items would sell for in the construction market. So with the jobs and the amounts of equipment they needed there, they were able to command a higher price, and that is shown in the data up there. You certainly wouldn't want to look at data across the U.S. and say a wheel loader at that time was worth $100 grand, when in that area they were selling for $125,000, $130,000, the same loader. but just based on location. So to kind of wrap everything up here and give kind of an overview of what we all went over today, you know, the real-time asset valuations are very, very important. When we take real-time into consideration, you must look at today's values. A unit that runs through an auction, in our examples, would be part of our data set today. That would have ran through yesterday. We would be accommodating for that today. We're just that quick in the real time out there. Big data is key to normalizing data. It's more than just data points. You have to clean it. You have to organize it. As you recall with the truck examples and such, it has to be, you have to lay eyes on that. And for us, we deploy the experts. What we have is a data science team that understands the values out there. That is very important in any valuation tool you use out there, is to have experts in that side of the business. With that background is very good out there. So not only that, you got to deploy people that can clean data and have that data organized. In too many cases out there, there is valuation tools that are being based off of very limited data, year, make, and model. That's an average out there. That's not a very good dictation of what that unit is actually worth. After you look at that data, consistent testing is a must. You must test that data on a weekly basis to make sure that health of the market simulations, to make sure that locations are still reacting similar out there, and different things or factors. And again, then at the final part, how do we expose the data? How do people expose the data to you? When it comes to a lot of finance companies that are working with thousands of assets, it's not feasible to run those through a web-based platform because we know time is of the essence there. If the deal needs to be, a value needs to be determined as a good value to lend on at the point of origination, or where is that value 2 years after you've lent on it, or in the point of a default or return, where is that value today? Are you in good shape? You know, you can get all that data through an API and several valuation tools out there, including Fleet Evaluator. But you know, the API is key because it can push that data to you instantaneously in less than a second. You can call for a value, and it could exist within your business system. So we do that with banks today, and it's a key component out there. For smaller lenders.
So Scott.
Yeah.
So Scott and Alan, as I'm thinking about this, and as we bring this to our Q&A portion, I'm thinking through this and say, okay, so what about real-time issues that change market dynamics? I mean, recently we've heard a lot about the steel tariffs. So how do banks or your other clients handle those things that are immediate market changes that have implications on the value of both potentially new and used equipment?
Well, the market is consistently changing, and there's a lot of factors that have an effect on what the values are today. I just read yesterday morning, in fact, that with all the tariff bargaining going on right now with steel, how that could have an effect on the ag prices. How do we relate that not only through steel, but they're also considering with working with China at this point that there may be a tariff on soybeans. China is a $12 billion industry for us when it comes to purchasing soybeans on an annual basis. Now, if there's a tariff involved in that, that is not only going to affect our economy, but it's also going to affect, what units sell for and all of that. So when it comes to real time out there, you must consider all of these health of the market sources, but our answer to that is that testing is important. We assess values to every market indicator that we've determined out there, which can be very extensive. Some of them have greater weights than others. So a commodity price may affect the ag market certainly more than interest rates or something along those lines. But we consider all of these valuations out there, and then to see that we're true, we test that back, not only with the real-time big data, but also into our positioning out there to show that what we're saying the value still matches up with what the values are coming in today. And we'll test several thousand units when it comes to that to make sure all of our categories are still right on the money.
Great, thanks. So listen, please go ahead and submit a question if you have one. We have a few minutes here where we can consider those. And as we see if we have any questions from attendees, I'll just ask, for you, Scott or Alan, you know, we talked about all these data points, but if someone's using your tool, how accessible are individual data points within a valuation tool to use as comps?
Sure. You know, individual data points are very difficult to gather out of a lot of tools out there. Within our system, we would provide some access in through a trending tool that we would call a market trend tool that is involved with Fleet Evaluator. So it would give you access to some real-time data points. We understand that as we give you values and just say you should believe these values, that's not always the case. You have a tendency to go back into Machinery Trader, Truck Paper, Tractor House, check Ritchie Brothers auction results, et cetera. All those are housed within our system, so we would give you access to a sample of some of the data points. It's certainly not everything we do within our system, but we'd certainly give you access to some data points so you can see some actual points sold out there to see what those are worth. I think there's a lot of value to having instant access to those.
So one more question. As you each, Scott, you from working with clients from a sales perspective and Alan from a data perspective, as you look forward in terms of just the increasing amount of data that's being created and the technology and tools that are out there and really any market conditions, what do you see in the future? What do you think what are the things that you're thinking about as you evolve the Fleet Evaluator tool and just think about the market and how you can better optimize valuations?
I'll answer part of that. I think Alan has some to add to that as well. Technology is ever increasing. The CEMC group that we're a part of today, you know, is just that. They're cutting edge technology out there. So as we move forward, you know, big data and the technology that surrounds it makes life easier with this. We get smarter through data. Tools get sharper through data. But as we move forward, I feel like from a sales standpoint that getting deals through at the right price and sharpening up potential losses that you may have on assets out there is the way of the future. Data allows us to get smarter. It allows us to get smarter through technology.
Yeah, and I guess I would add, you know, as we collect more data, as newer methodologies and statistical techniques come about, you know, our overall goal is to try to minimize that error that we have on that piece of equipment. So we're always going to get better. So I think having that is we can always look for improvement.
Yeah, every day we get sharper and sharper on values with new methods our data scientists determine and find out there. And at a certain point, you know, it's not about changing whole percentages. It's about shaving off a 0.5% to get sharper on a particular category where there's limited data. Those are big wins for us, big wins for everybody in the industry, and that's what's allowed through different techniques and different data sources and the collection of data.
Well, thank you. I think looking at big data from the perspective of you know, asset valuation has been eye-opening. So seeing no other questions out there, I'll once again thank everyone for joining this CEMC webinar, and it will be made available. It has been recorded and it will be made available for those who might want to listen again or share it with some of their colleagues. So thank you again, Alan and Scott. And,
thank you, Patricia.
Very welcome. Bye-bye now.
All right, take care.
Thank you.